Hi and welcome back to Cheeky Crypto. My name is Nick and today guys we're going to be jumping down into the world of Bitcoin. We've seen some rumors flying around yesterday about 118,000 Bitcoin being withdrawn from the exchanges. We're going to jump into what is going on with outflows, inflows, wallet counts, and all that interesting stuff. There's also some interesting things around Binance in terms of, halting withdrawals and things like that. A lot of people were speculating, was that because there was a run on Bitcoin? It turns out it's actually more to do with the gas fee situation on BTC and miners, but everything seems to have now been resolved, at least at the point of recording this video. I can't see anything else going on. Withdrawals are now active on Binance. But as we get into the video, we're going to be talking a lot around those outflows, those inflows, the wallet count data, what's going on with big movements in the space for Bitcoin. We'll be jumping into the charts and giving our thoughts and opinions on that macro view as we start to see a pull to the downside. So as I get into it, if you find it useful and informative, smash the like button. I do appreciate that. If you are new to the channel, then why not go ahead and subscribe, tapping the bell, selecting all the notifications, and you will stay up to date with everything that we do here at Cheeky Crypto. If you haven't yet joined us in Discord, guys, check it out, linked in the description down below. Let's go ahead and jump right down into this one, right? So what we'll do is we're going to start things off by actually probably just talking a little bit around how Bitcoin plummets as Binance halts Bitcoin withdrawals due to large volume of pending transactions. You'll love a clickbaity title, which is something that seems to be coming up in our comment section an awful lot these days. And unfortunately, clickbait is a part of the game. Don't hate the player, hate the game. And all that kind of good stuff. But here we have an article. I may even just copy this title and post it as the title for the video. I don't know what's going to be the title yet, but we'll see. So Binance has finally resumed withdrawals after pausing twice in 24 hours. 𝗕𝗘𝗪𝗔𝗡𝗡𝗅𝗧 using a Lightning Network to prevent such situations in the future. Binance also addresses concerns over massive outflows, stating that they are such fund transfers between hot and cold wallets. So again, there's nothing actually kind of going on that we can see from all of those kind of things. Hopefully that puts all of that to rest. You can find this on Crypto News Flash. May link it in the description below as well. But let's go ahead and jump on over to the on-chain metrics, okay, because it's important that we kind of reflect on kind of things that are going on here. So keeping everybody up to date, right? So we see 3.5566 million Bitcoin going onto the exchanges since the 1st of January 2023 through to the 7th of May 2023. Okay, we can see that the outflows are 3.5056 million, meaning that 51,000 Bitcoin has come off the exchanges. Now, the big takeaway here, guys, is this clean data doesn't show you any of that hot and cold Binance wallets, that kind of stuff. This is showing you Bitcoin that's flowing away from the exchanges, right? It's not held by the exchanges. And we do not see this magical 118,000 Bitcoin, right? Just disappearing from the exchange. So this tells us that actually, yeah, we're probably on the right lines of thinking there was a movement between hot and cold wallets within Binance directly. And obviously a lot of people kind of just jumping on that and all that kind of stuff. We can also see from the line graph here that we don't see a significant outpull or outflow of Bitcoin. It's actually still quite aggressively, it's actually quite moving up slowly over a period of time. Small pullback here with a little bit of outflows, but there's nothing major kind of going on. We can also see this on the 30-day average bar, more Bitcoin flowing to the exchanges than is coming off the exchanges. This really hasn't changed at all. If I can bring this up here, I can actually show you these numbers. And so when we kind of jump over into the inflows and the outflows on a line graph point of view, well, we can see that there's no major spikes within the movement. So yesterday we have 10,554 coming off the exchanges and 7,441 going on to the exchanges. So nothing to worry about there in kind of that sense of it as well. We can see also that volume and just moving around generally is also pulling back over time here quite a bit. We can see that volumes are peaking down low. Okay, so 10,000 here. On the low side, that's 10,000, that's 10,000, but this is a new lowest point for the way of inflows, right? Inflows are at a significant low now, as we obviously have seen a significant amount beforehand. So again, just note it's worth noting 3.5566 million Bitcoin going onto the exchanges since the 1st of January to yesterday, and 3.5056 million coming off the exchanges since the 1st of January through to the 7th of May yesterday. Now, why do I note this? I note this because a lot of people, when they look at the price chart, specifically on that kind of a weekly level, right? They look at these things and they say, down here, this is the bear market bottom of 2018. We had a very significant run here, right? You can kind of see it. Let me just grab this, right? This is the bear market low point. This is December of 2018. January 2019, we start to see a significant run to this upside here, which happened to be June 2019 before we had the pandemic and stuff bringing us down in March 2020, right? So what's really interesting about these things is people are saying, look, we're doing a bear market now. Bear market's over now, and we're in a bull market because we had a very similar kind of movement here and here, right? So 2019 versus 2023, very similar from the chart point of view, but only from a charting point of view, not from the underlying data. And I've been through this many times. We have a lot of different variables, right? Fibonacci levels, all-time high levels. We also see significant changes in the amount of Bitcoin that is flowing to and from the exchanges, which brings me back to our on-chain data. Okay, so 3.5566 million inflows this year and 3.5056 million outflows this year versus 2019 for the same time period, the 1st of January 2019 through to the 7th of May 2019. We see 6.2509 million Bitcoin flowing to the exchanges and 6.2701 million flowing away from the exchanges. Okay, we see vastly different data here, right? We can see that we're almost half the volume of what was going on previously. Okay, so we think about it as volume, but we see half the volume in 2023 versus 2019 than 2019 moving in and out of people's wallets. There's a lot less Bitcoin now, 45 to 50%, less Bitcoin now moving around. Okay, and this is important because when we start thinking about why bullish, why bearish, well, we have to kind of really consider what actually makes a bull market and what actually makes a bear market, right? And a lot of people kind of get things twisted, and it's not their fault. It's just, unfortunately, there's a lot of things to be focusing in on and a lot of really pointless metrics that are just there to confuse you, at least in my humble opinion. So when we actually break everything down to its very fundamental basics, the only things that really matter are supply and demand. I talk about it all the time. I probably bore people to death with it, but it's essentially, supply and demand. They're the only two things that really matter. Everything else can just kind of be chalked up as noise, right? And so when we think about the inflows and we think about the outflows, we have to consider where the supply is coming from and where the demand is coming from. And we can go really deep within some of this stuff. And we just take a look at inflows right now, which is not the be-all and end-all of volumes or metrics or anything like that, but it helps us understand just what's going on here at one of the key levels. And that is essentially that volumes are lower in terms of Bitcoin moving around, right? Significantly lower than what they have been through that same time period, right? So we can't expect the same thing to occur than what happened in 2019 when we have, 45% of the or less of the Bitcoin moving around, right? So a lot less activity going on. And so what actually makes a bull market and a bear market comes down to supply and demand. And when you have a bull market, the demand, i.e. people buying, outpaces that of the supply, people selling, right? So when we have inflows and outflows, we can think of these things quite simply as the inflows of Bitcoin are your supply and your outflows of Bitcoin from the exchanges are your demand, right? So is there an imbalance in your supply and demand metrics for Bitcoin? And for the most part, we're seeing a bearish situation here because there is more Bitcoin going onto the exchanges than is coming off the exchanges. So again, that would, if we were to think of it in a real basic sense, there is more Bitcoin being made available to be sold than it is people taking it away from the exchanges after buying it. So, it's not the be all and end all. It's not a perfect analogy, but it helps you understand exactly why these inflows and outflows are very important. Now, we can go deeper than this yet again, because again, supply and demand are the key things that we have to focus in on. And in order to kind of get a good bead on that, we have to understand who is buying and who is selling, and what would typically happen when someone is buying and when someone is selling, right? So we have, I'm going to just look at 6 wallet counts today, 6 different demographics of wallet count, different levels, right? We have over here on the right-hand side, these are what I call the krill. They have 0.1 Bitcoin minimum in their wallet. So they can have more than 0.1 Bitcoin, but they can't have less, okay? And we can see that this black line is a number of wallets that have over 0.1 Bitcoin in their wallet. And basically it's been going up. It's been going up very aggressively because there's a belief out there that we're in a bullish market, okay? And therefore retail investors, which are all of these three that you see here, do believe that they're in a bull market and therefore FOMO into the market, okay? And what do we see? Well, we see a very significant surge with these wallets to the upside. There's 4.3 million wallets that have over 0.1 Bitcoin in them. Now, shrimps have at least 1 Bitcoin in their wallet, okay? So they can have more than 1 Bitcoin, but they can't have less, okay? And here we can see that we have 996,000 wallets, and they've been 996,000 wallets, sorry, and they've been on the increase. Again, very much like the retail investor mindset, they have been FOMOing in because the bottom is in, okay? And we can kind of see that in here as well. Price action's been going up. They've been FOMOing in like mad. We're going to the moon, okay? Then you have the dolphins, over 10 Bitcoin per wallet. Can't have anything less, but can be over 10 Bitcoin. And they are not as confident as the shrimps or the krill, but they are still aggressive buying up, right? They believe that the market is buoyant, it's going upwards. Maybe it's a moonshot, but these are high net worth individuals. So some movements in the market can be a little bit nerve-wracking for these guys. So when you start to find dolphins tend to react a little bit earlier than you see your shrimps or your krill, but nonetheless, they all react the same way. They overreact emotionally to price action. And I can show you a couple of things just on these line graphs that show you exactly that. Okay, so for example, we can see if we take a look at the shrimps here. There's a small pullback just here in the number of wallet counts, right? So there were 988,000 here. They dropped down to 986,000. So 2,000 wallet counts dropped off 1 Bitcoin, right? Or were less than 1 Bitcoin. And what happened here is this price was 22,000 when they started selling or coming out of their Bitcoin. And then they start buying again, or more wallets start to increase again at 27,000, which basically means that they sold low and they bought high rather than buying low and selling high. And this is a retail thing. You can see it all over the place, specifically within these areas here. So here we have $28,000 they were selling, and then they bought at $30,000, right? So you can kind of see it all over the place, and you can see these things getting depicted all the time. Sometimes they get it right. Sometimes the reactions they work for them, right? 23,000, and then they buy it back at 22,000, right? So you can kind of see it working sometimes, but ultimately it's a retail mindset. It's overreacting to price movements, panic, and FOMO. That's kind of the gist of it. Now, when we go up into the larger size wallets, this is where things start to get really interesting. Okay, we can see that we have sharks, which have over 100 Bitcoin per wallet. It can be over 100, but can't be less than 100. And these guys have been doing an absolute blinder in the way that they bought in December, rode this up massively, and then dumped hard, basically bringing in or cashing in all those profits that they've made. Okay, so these are pro-level traders in my opinion. They don't always get it right. Sometimes they're wrong, but for the most part, they did an absolute blinder. They did a fantastic job December into this year. Okay, so they can see that here. Now, whales, on the other hand, 1,000 Bitcoin or more per wallet, can't be anything less, but can obviously be over. And again, we can see here, just on this 90-day view, it doesn't look like they're doing anything much, right? Bouncing around a little bit of accumulation, a little bit of increase in wallets occurring here, just a little bit. But ultimately, when we take a look at the zoomed out views, you can see there's not actually terribly too much activity going on when it comes to the Bitcoin whales. Now we've got the Kraken size wallet. This is 10,000 Bitcoin or more, but can't be less than 10,000. Okay, and here you can see that they have aggressively coming out. Okay, and this was a couple videos ago. You can check it out if you're new to the channel. 121 wallets dropped down to 115 wallets. They've now dropped or pushed back up to 118. Okay, so we did see that there was a little bit more in the way of outflows recently from the exchanges. If I come back here, we can see that there's a little bit more here, nothing much, but there's a little bit. And we can also see that there is an increase now in these wallet counts here, not by much, but by a little bit. Okay, so it's important that we note that these guys are basically the ones that are controlled in the market. These are the big money, big funds that will basically dictate whether your price goes up or price goes down, and will flood the market with Bitcoin or soak up Bitcoin from the market. Okay, so these are the ones that the market drivers. Whereas what you have over here, retail side, they're not really driving anything. They're just following price action or being led into traps and things like that. Now that's not how I want it to be. That's just typically how historically things have played out. And what we want is we want retail to win, but I just don't see that, and I don't think retail can actually do this with their current mindset that retail investors have. You need to collaboratively work together. Just think Wall Street bets, but on steroids for crypto. I just don't think we are there or thereabouts. Now, what I said is we want to zoom in and zoom out of these wallet counts. So everything comes down to that supply and demand metrics that I've been talking about. Okay, I'm already 15 minutes into this video, so I'm trying not to kind of just repeat myself over and over and over again. But everything comes down to supply and demand, right? So if we're seeing a lot of demand at the retail level, well, we must be seeing a lot of supply at the whale level, at the smart money level, right? And so when we take a look at our 365-day view for our retail investors, I'm just going to use the shrimp for this example, we can see that they steadily have been accumulating. And when we take a look at the smart money, and we'll just use the whales for this, you can see that they've been aggressively coming out, right? And so it's really important that we understand that if whales are selling, they're selling it to someone, and in this case, they are selling it to retail investors. And if retail investors are to sell, well, someone's got to be buying it, and so therefore it's more likely going to be the smart money that buys it. And so if we look back at 2018, we can see, you know, these shrimp wallets, they were accumulating during the bear market, and then they started to come down, they started to sell off, and they sold into the lows. Okay, and then you see the whale investors from 2018 not really participating in the bear market until retail investors are selling. When retail investors are selling, they're starting to accumulate. So these two things, they come together quite nicely. Retail comes down and whales and smart money goes up. Okay, so where we are right now essentially is that retail investors are not selling, they're just buying. And so therefore, if they're looking to buy, well, there's going to be supply that's going to be there, and that's coming from smart money at the moment, okay? So all in all, everything from the data points that we've referenced here, low volumes in terms of transactions on-chain, so we're not seeing a lot of, transactions, low volume in a way of inflows and outflows from exchanges. This is significantly lower now than what it was in 2019, so comparable time periods, and for both be the start of bullish markets that people are trying to believe us, or try to make us believe, then we should be seeing variously higher inflows and outflows, not the lower side that we are currently seeing. We then see that, you know, essentially retail investors are still FOMOing in, whilst smart money is coming out, specifically when you take a look at it at that bigger macro level. And this is very similar to what was going on back in 2018, and this is kind of where we are right now. Okay, so all in all, it's not giving us that positive outlook that we really want. So at a macro level, things are bearish. Now, when we jump down into our charts and we take a look at the daily charts, either Elliott wave theory or smart money concepts, or just our support and level resistance, demand, supply, and all these things, again, they're not giving us kind of concrete proof that we're in a bullish market either. There's a big bear flag kind of going on here, in my opinion. Higher highs, higher lows have a tendency to break on down. We're looking at the breakdown down right now, but we do think that we'll probably see another surge upwards. Liquidity grabs essentially is what's going on here, in my opinion. A lot of money is flowing around, but it's flowing in one direction. I still suspect we have lower to go, mainly because we see that the whales were selling November. So if we saw smart money selling down here at the bottom, I can't see why their smart money would then start buying up here. That wouldn't make sense. Logically thinking, they're probably going to have to buy down lower than the November low. So unpopular opinion as it is, that's my stance on it. I cannot see why we would be in a bullish market right now. And I suspect that when the Fed pivot, when they do make that pivot, I would expect us to drop down quite significantly, like they historically have done, something that we highlighted about 3 weeks ago, I think, in our Discord server. So when we pull that chart up and we can see all of those pivots historically and all the pullbacks that have occurred from them, I suspect that that's really where the new lower low comes in. Until then, we might see some volatility, we might start pulling back. There's lots of fair value gaps to be filled out, so there's nothing terribly too unusual with that. We are right up on the supply range right here, so this is the area that has previously demand, now turning supply. Rejection from here is obvious, but if we do break above this area and we close above it, then that would actually give us a bullish tail, and we might be looking at a little bit more to the upside. Until then, though, we should expect to move 24 to 25, the next area of previous resistance, potentially turning support, or previous area supply turning to demand. So we'll be looking for that. Otherwise, everything else is pretty much business as usual in the case of BTC. If any of this is unusual to you, join us down in Discord, check out Cheeky School, linked in the description below. But for the most part, I think, yeah, everything's playing out kind of as we have been talking about for the last, at this point, too many months. So yeah, if you found it useful, hit the like button. I appreciate that. If you're new, subscribe. Don't forget to join us in Discord. And guys, I'll catch you all in the next one. We are not financial advisors. None of what we have communicated verbally or in writing here should be considered as financial advice. It is not. Do your own research before investing in any digital asset or affiliate offers, and understand that investing in any crypto is risky. If you do, you need to be prepared to lose your entire investment. This video is for information and entertainment purposes only. All our videos are strictly personal opinions. Please make sure you do your own research and never take our opinions for financial guidance. There are multiple strategies, and not all strategies fit all people. Our videos are not financial advice.